Good morning. This is Japanese Economic Review Channel. Today, we review the market developments from yesterday, Monday, July 13, 2026. It was a day defined by a sharp divergence between resilient U.S. tech momentum and localized geopolitical risks that weighed heavily on Asian markets. While AI demand continued to fuel global sentiment, the Tokyo market faced significant headwinds from Middle Eastern uncertainties and regional volatility. Yesterday, the Japanese market experienced a major setback. The Nikkei 225 plummeted by 1,315 points, closing at 67,242.73. This sell-off was largely triggered by rising tensions in the Middle East and a weak performance in South Korea's Kospi. In the currency market, the yen remained under pressure, with USD JPY trading at 162.14, showing continued weakness from its morning levels. The resilient backdrop from the U.S. session provided some contrast. The Dow Jones rose to 52,637, while the Nasdaq extended its winning streak. A key driver was the ADR debut of SK Hynix, which priced at $170 and sparked a capital rotation into AI giants like Nvidia and Meta. Additionally, geopolitical premiums softened slightly after President Trump's SNS post regarding continued talks with Iran, helping to cool crude oil prices. Yesterday's trading session saw intense intraday volatility. The Nikkei hit its bottom at 1430 JST, dropping 1,904 points to 66,653. However, late-day rebound hunting helped the index recover nearly 600 points by the close. Market activity was exceptionally high, with the prime market trading value reaching 10.01 trillion yen. Decliners significantly outnumbered advancers, with 941 stocks ending the day lower. We observed a clear sector rotation yesterday. Export-oriented tech and electrical stocks like Advantest and Taiyo Yuden faced heavy selling. Conversely, financials emerged as outperformers, with Mitsubishi UFJ and Sumitomo Mitsui gaining ground amid rising interest rate expectations. Defensive consumer stocks, including ASICS and Nintendo, also showed resilience, highlighting a shift toward more stable domestic assets. The TSE Growth Market 250 Index fell yesterday for the first time in 3 days. While the massive drop in the Nikkei dampened investor sentiment, the decline in emerging markets was relatively contained in percentage terms. We saw upward momentum in specific names like Synspective and Bushiroad. Notably, the recent IPO Go maintained steady performance despite the broader market turbulence. Despite the macro volatility, yesterday saw several significant corporate moves. Murata launched a high-precision position detection system, and Kawasaki Heavy secured new orders for electric propulsion systems. Globally, Kewpie is establishing a new sales base in India, and Daikin formed an alliance with Itochu for commercial AC recycling. These initiatives indicate that strategic expansions and ESG goals remain top priorities for Japanese firms. To summarize yesterday's key takeaways, first, the divergence between U.S. tech strength and local geopolitical risks remains a primary focus. Second, the weak yen continues to drive capital toward defensive domestic sectors like banking. Finally, the active corporate pipeline suggests that underlying business health remains robust. Understanding these shifts is crucial as we navigate the risks and opportunities in the current market cycle. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.